Good evening. I'm Dan Fitzpatrick at StockMarketMentor.com. Look, every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money, right? Well, good trading takes more than just pushing the buy button every morning so you can take the stocks that you saw on TV last night. Okay, I'm here to help you make money on these three stocks I saw on TV. We're going to start with Alibaba. Now, after the market closed, SoftBank reported that it's selling $7.9 billion worth of Alibaba stock. Okay, now they own 30% of the company. This only takes them down to 28%. Okay, so wow, $8 billion knocks them down from 32 to 28% of the company. I sure wish I was SoftBank. Anyway, so then the question is, what's up with this? Is this the time to sell? Nathan was yucking it up, and I was too actually, about how dumb this makes Yahoo look, because they've had a big stake in Alibaba. It's like the one thing that they've done right this century. And so what are you going to do with that? I don't care about Yahoo. What I care about is Alibaba. Here's the thing to remember. They're selling $8 billion worth of stock. Somebody's buying it, and it's not Billy Bob and Jethro, portfolio management company. Okay, some big money is buying this stock. Also, not exactly in an uptrend to where you can say SoftBank is really taking huge profits. I don't know what their cost basis is and don't care. They're selling. The point is, somebody's buying this, and this is like big news. Oh my gosh, $8 billion worth of stock is being sold. The stock is down to $80. I think this is a stock that you can be buying here. Okay, then they were also talking on Fast Money about Tesla, whether the company's going to be able to meet its manufacturing goals. Basically, whether they're going to be able to make enough cars to satisfy all the demand. It's one thing if everybody wants your product. It's quite another if you can actually deliver that product to everybody. So what's up with that? I mean this honestly, I really don't give a rip whether the guy, I forget his name, on CNBC says that Tesla can meet their goals or not. Tesla trades the way Tesla trades, which is a little bit unpredictable. And since this February low, it's been kind of one of those buy the stock on dips, even though the fundamentals stink. What I think you got to do with Tesla is look at it in the context of this box or maybe this one and say, no matter which way you cut it, this is not a good entry point for the stock. If you're a Teslonian and you want to buy the stock, that's great. Good for you. It's above the 200-day moving average. I'm just saying from a trend standpoint, there is none. Flat 50-day, flat 200-day moving average. Stock has been on both sides of the 20-day moving average recently. This is a stock where you really have no edge. So if you're going to buy Tesla, live and die by the sword. Now, the last thing, Rich Ross, I forget his name, technical guy for some company, again, I forget that too, was on Fast Money talking about, basically he's bullish on financials. The yield curve is flattening. Fed's probably going to raise rates, and so he's bullish on financials and was showing, the S&P financial index. So I'm looking at his idea, and he was talking about BlackRock, and Feinerman noted that, I'm not really sure why you're onto that because it's not really a financial company, it's more market related. And so, okay, that's all well and good. Everybody has their opinions. I'm just looking at the different financials, trying to plan my own trade because I don't really care what somebody else thinks. I want to know what I think, and the only way I can think is by trying to take some independent thought here. And I want you to do that. I want you to listen to my, certainly watch my videos, hopefully. And by the way, thank you for doing so because you are now. Gotcha. But then I want you to use your own opinion because I don't know everything. I get stuff wrong all the time. But I'm doing my best. You need to do your best too. And this is what you do. You go like, okay, JP Morgan. It's a financial company. If the Fed starts hiking rates, even one time, financials are going to go. They're going to go higher. JP Morgan, not in the best, not at the best point to buy. You can see the zigzag. Okay, this is really up at the top of the range. So what you do is make your trading setup in advance, and that is if the stock falls back to the 50-day moving average, you go ahead and consider buying that stock. And I'll show you how I do it here on TC2000. And by the way, I'm showing you this. I'm not hawking TC2000. I'm just showing you what I do, and I have no financial upside in this. I'm just showing you what I do. So I want to be buying this at the 50-day moving average. So I'm setting a price alert where the moving average in relation to the price history is above, basically above the stock price. I want to set that for a month. That's it. So when the price goes below the 50-day moving average, I'm going to get a little alert, and it's going to say buy point. Then I'm going to look at this and decide whether I want to buy or not. That's how I trade this kind of stuff. You can use these types of alerts, and your trading software has them too. You just have to get in the habit of using them. So anyway, that's my take on Alibaba, Tesla, and JP Morgan. Hope it works for you. Hope you'll try Stock Market Mentor. I'll see you on the other side.